price was completely inadequate. You heard about the gas price was 10 cents a couple of years back. It was not enough to incentivize the supply to support this kind of aggression. Pretty much everything about our gas sector was just an adjunct of oil. It was not a dedicated gas sort of framework. And so what we had to do was basically transform a virtually inexistent sector to what would be one of the most aggressive sectors in a very short period of time. And we're going through that reform. So the first thing we did was basically an intervention through what we sort of called it the kickstarting the domestic market by creating a couple of things there. I'll just, if you look at the red line there, the first thing we did was to introduce the domestic gas supply obligation rule. This meant that we needed to force, for lack of a better word, we needed to force supply into the domestic market because given the state of the market, it was not possible to get the suppliers to willingly make gas available to that market. And that was going to catalyze a major crisis because at the time we had the power sector already growing at an astronomical rate and we had a gas sector that was lacking behind in terms of that. So we had to introduce a domestic supply obligation which was backed by regulation. But in doing that, we could not just compel the suppliers to supply gas. We needed to change the commercial framework for gas. And so we started with the gas pricing reform as well, which has basically made a big difference in I'll talk about that in a few minutes. Then, of course, the commercial structures, we needed to put in gas supply agreements that were bankable and they were world-class agreements, basically. And of course, we needed to put in securitization structures that will give the investors confidence. And more importantly, we needed to put in place a gas infrastructure blueprint and accelerate its delivery to meet this kind of growth. I'll talk to you shortly about that. Now, we believe that by putting all this in place, we would have created the basis for step 2. And our objective in step 2 was to attain full commerciality of the gas sector, which meant that the prices of domestic gas actually were at export parity, in which case the investors were neutral both to supply export or to supply domestic. We felt that that was necessary to mitigate any kind of distortions in the market that would create a lack of growth in the sector. So our step 2 was to make sure that we completed the infrastructure, because with the infrastructure complete, we could link all gas supply sources with all demand sources and create liquidity in the market, which would allow for perfect competition to take place. So, and of course, complement that with appropriate legislation, which is ongoing in PI. But that was our step 2. By step 3, we expected that we would have completed our core infrastructure backbone, would have attained full liquidity in the gas market, would have brought in place the legislative framework, the regulatory agencies would have been in place, and would have then been in a position where the market was ripe for complete liberalization, where you can have a willing buyer and a willing seller, which was our ultimate destination in step 4. So this is the journey that we set out to, we embarked upon about 4 years ago. And I'll just give you very quickly the progress we have made in that respect. First of all, now this is the transition in gas pricing that I talked about. We needed to move gas pricing from the non-commercial price of 10 cents. But we could not do that overnight to $2 or $3 because that would have catalyzed a failure of the market. Our fear was that if we overnight introduced a price that was not sustainable for the market to bear, would collapse the entire contractual framework and it would be difficult to recover from that. And so we had to do it in a staged manner over the next few years. And like one of our key suppliers talked about this morning, this is beginning to take hold and is beginning to incentivize our supply. Not only have we changed the pricing for gas to power, but the pricing for gas to the local distribution company is also different. As you can see, that goes to $3. And like one of the questions that was asked this morning, whether there is an aggregation framework where you can pool the price of gas, that is exactly what we have done, where we have sector-based pricing, but on aggregate, the aggregate gas price trends towards export parity, so that the suppliers get an aggregate price for gas, part of which goes to power, part of which goes to local distribution companies, part of which goes to gas-based industries. But all in all, the average price that comes to the supplier is going to be such that it is neutral, whether that gas is going for export or whether it's going for domestic. And of course, infrastructure. On the top hand corner, you can see the infrastructure that existed in the country before. And on the bottom corner, you can see the infrastructure blueprint we had to put in place to support the kind of growth we're looking at. In the past, our pipeline infrastructure was limited to the western part of Nigeria through the Escravos-Lagos pipeline. Not only is it that pipeline capacity is small compared with the kind of growth we're talking about now, but also we found out that the connectivity is limited. A lot of our gas reserves are located in the eastern part of Nigeria, but there's no connection between the east and the west. And of course, like was mentioned earlier, there's absolutely no gas pipeline to the north, basically. So that was where we were about 4 years ago. Our infrastructure blueprint is now what you see at the bottom right-hand corner, which basically looks at A, expanding the western infrastructure, B, connecting the east to the west, and C, expanding the eastern network, and D, extending to the north, basically. That is the infrastructure blueprint that we've put in place, and we are making significant progress in there. There was a question earlier today about gas infrastructure in Nigeria, and I'll give just a quick update on that. So this is pretty much the same blueprint, looking at it imposed on the map of Nigeria. So you can see the western pipeline, and you can see the eastern in red, and the broken blue is the link between the east and the west, and of course the blue to the top is the northern pipeline. Putting all of this together has been the basis for our gas infrastructure blueprint that we've been pursuing. So where are we in terms of all these reforms? The first thing really is from next to nothing in terms of gas supply in the domestic market. We have in the last 3 years grown gas supply aggressively to about 1.5 billion cubic feet per day in the Nigerian domestic market today. And part of that really is a testament to the success that we're making of the reform as we speak today. And some of the key players in that are Mr. Vuru, who spoke today, many of whom were not in the gas sector before, but are now beginning to be key players in the Nigerian gas sector. So we think we're beginning to make good progress in gas supply growth in the domestic market going forward. Now, in terms of going forward, we see a significant addition of gas supply coming forward. These are the different projects that we're working on that are going to be bringing more gas to hit that target that I showed you earlier. So we see growth coming here. This is basically showing our gas supply to the power sector. The bars show the power sector demand. On the left-hand side show you the short to medium-term supply. You can see the black line shows our progression in terms of our supply relative to the power sector demand up until 2014, 2015. You can see that we tend to coincide with the demand by 2015. But of course, as we go forward, the power sector demand is expected to grow as aggressively as so you can see on the right-hand side, you can see that the growth up to 2019-20, both on the power sector and the non-power sector is aggressive, but so also is our gas supply to meet that growth. Now, on gas pricing, you can see the blue shows what I showed you earlier in terms of our migration and pricing, and the yellow shows where we are in terms of actual. As we speak today, the gas price has increased to $1, and by the end of this year is expected to increase to $1.50 and gradually trend to $2 for the gas to power sector. And on the other side, for gas to distribution company, we're pretty much where we plan to be. It is now at $2 and is expected to grow to $3. It's important to note that our strategy is not to regulate prices in perpetuity. The purpose of this is a transitional pricing arrangement to bring the gas price from what was a non-commercial price towards a level that was more commercial. And at that point in time, we expect to migrate into a regime of willing buyer, willing seller. So once we have moved the market from one that is not amenable to a market-led willing buyer, willing seller structure to one that is now pretty much at equilibrium, the plan is to allow for willing buyer, willing seller transactions to take. And in fact, as we speak today, the willing buyer, willing seller deals are beginning to manifest. So you're seeing a two-track regime, the interventionist regime on one hand and the willing buyer regime on the other hand. And the expectation is that by 2015, 2016, the two regimes will begin to converge and we have a more sustainable commercial environment in Nigeria. So in the long run, we believe that we're putting in place a structure that is sustainable and it's aligned with the pace of progress across all the sectors in Nigeria. Now, where are we with respect to infrastructure? This is where we've made one of our biggest progress ever. If you remember the pipeline that I showed you, this is the network here. I can show you the progress we have made up until now. On the left hand, on the extreme left-hand side, where you have the yellow lines, that's the first part of our pipeline expansion, where we're going to double the capacity from 1 billion cubic feet per day to 2 billion cubic feet per day. Yeah. Most of Nigeria's power plants are located along this trajectory. As we speak today, we're almost 60% through with that expansion, and all the pipes that are required for the remaining part of the segment are in country. Construction is ongoing, it is fully funded, and is expected to be completed by January next year. So in there, we're going to be having a petrochemical plant, which is to be built by the Saudi Arabian Senel, a fertilizer plant, 2.6 million tons per annum capacity, which is to be built by an Indian company, Nigerian, which is moving very aggressively in terms of development potential. It's going to be a free trade zone. There's going to be a dedicated power plant, but also there, we're going to be looking by phase 2 at major gas industries like aluminium and so on and so forth. So this is what an artist's impression is of what this industrial park is going to. It's going to be the biggest industrial park in Africa. It's about 2,700 hectares of land, which has been secured as we speak. And we expect that within the next 2 to 3 months, we commence site clearing and site activities there. In here resides a huge investment opportunity. Like we said, a major player there is already an Indian company, but we see more opportunities, both for Indian power companies, Indian pipeline companies, and pretty much any other relevant Indian participation in this place. Our plan is to replicate this model across parts of Nigeria as we go forward. But once this is done, our estimation is that with this alone, already Nigeria becomes the undisputed center for fertilizer production in Africa, for petrochemical production, and for methanol production. And we feel that the combination of this industrialization agenda with the power agenda together begin to create a basis for us to move forward. So what are the investment opportunities that are here? Basically, on the industrial park, we see huge opportunities. There is a need for a 350 megawatts power plant in this industrial park. So I know there are power players here like SR and co. Here we see huge opportunities for captive power production because the power plant is going to be consumed in situ there by heavy manufacturing industries, the petrochemicals, the fertilizer, the methanol that I talked about. So this is a clear opportunity. Supporting that in itself is a pipeline. There is a 70-kilometer pipeline that is bringing offshore gas dedicated to this industrial park. Therein lies an opportunity yet again for Indian investors who may be looking to invest in this opportunity as we speak. But of course, we're also going to be building the gas processing facility where we're going to be treating the gas, extracting LPGs and ethane and so on for the petrochemical. We see therein also an opportunity for investment by potential Indian investors. But beyond that, this basically shows you the same thing. I mean, the pipeline labeled 1 is the pipeline I was talking about, which is about a 90 kilometer from offshore to the location of the industrial park. This is an opportunity that we think that a pipeline investor can invest in. It is going to be collecting gas from ExxonMobil. There's about 400 million cubic feet per day of gas that is available and can fill the capacity of that pipeline immediately and bring that pipeline to shore straight to the industrial park where it's going to be consumed. So it's a very tightly knit, very bankable arrangement for potential investors going forward. But also I told you about the investment opportunity in the Calabar-Jakarta pipeline, the $5 billion investment. There's an investment that we think is going to be funded both by federal government equity but also by private investment. We are doing everything within our powers to make sure that that investment is bankable. So we're working on the transmission tariff that will make it work. We're working on the offtake agreements that would support it. And we're also talking to the government about the necessary securitization that will give the investors the comfort to invest in this pipeline. We believe that here, not only is there an opportunity to invest in the construction of the pipes, but also there's an opportunity to build pipe mills in Nigeria, but also to tie that through ECA's arrangement with pipeline imports from India or from wherever. So in there is a huge opportunity to invest in the gas pipeline infrastructure going forward. And it's this chart you've seen earlier. This basically shows you the same pipeline. This is just a breakdown in the phasing of that pipeline. It's not very clear, but our expectation is that we're going to start phase 1 of that with an expansion of the Eastern network, and then expand that through phase 2, and then migrate to the north in phase 3, all of which will start concurrently. And like I mentioned earlier, the government is raising Eurobonds, and by the end of this year, we expect to put that all in place. And this is the kind of financing scheme that we put in there. So, in a nutshell, and to conclude, a lot has been said this morning about what it takes to implement a reform and to make it sustainable. I mean, you've experienced it in India. It's not easy to implement reforms. But whatever reform you put in place has to be customized for the peculiarities of the environment. What we have done in Nigeria is basically taken world-class observations in other markets, but we have particularly customized it for the specificity of Nigeria. So, and you can see that some of our reforms are beginning to yield results. And the easiest way to see it is when you hear one of our gas suppliers who spoke earlier this morning, who are now beginning to see gas as an opportunity space and actually even looking to invest more in gas than they ever thought before. We believe that this is evidence that the reform is beginning to work. We believe that the infrastructure that we've put in place is clearly a major enabler, because this opens up access to gas in Nigeria, both for domestic and for export, because we now have an infrastructure blueprint that is across the country and is actually tying all our major supply sources with potential market. And of course, we've put in place all the commercial frameworks in place. So I think that there is a fertile ground for collaboration, and we put in here our contact details in NNPC in the event that anyone is interested in talking to us. But in conclusion, I think the key thing to bear in mind is we have a clearly articulated vision and aspiration for the Nigerian gas sector. And it is backed by a reform that is carefully thought through, and one that actually leverages both the government but recognizes that government in perpetuity cannot manage a sector. And so clearly puts a roadmap that takes government intervention as a requisite during this transition, but very quickly after the transition phase creates the environment for the private sector on a willing buyer, willing seller basis to drive this on. And we're beginning to see that. We see a very aggressive expansion plan, both on our infrastructure, but also on our industrialization opportunities. And we feel that the best investment partners are partners from India and beyond. And I'll give you the reason that we've talked to investors from the US, from the UK, and from the West. And every time you talk to the investors, the first thing they talk to you about are the risks in Nigeria, the insecurity. They tell you 10 reasons why they cannot come to invest in Nigeria, why it's difficult to invest in Nigeria. Nagarjuna, and I make bold to say, I am so impressed and so proud of our association with Nagarjuna, an Indian company. Nagarjuna has solely shown confidence in Nigeria. Not only has Nagarjuna stayed with us for the last 4 years, they have worked collaboratively with us. And places where I cannot go as a Nigerian in Nigeria, the Nagarjuna investors, the guys, have gone into the Niger Delta on their own. And they have made friends with the community. They have established a relationship which even NNPC does not have. And together with them, we're going to be building Nigeria's first gas-based industrial park. This gives me confidence. Yeah. And it is for this reason that I thought that this forum was very essential, because I think we cannot go anywhere but east to find our investment partners. And I think in east, the closest to us can be India, because there's so much we share together and our risk perceptions are very similar. And I think that we can walk this together and make benefit both for India but also for Nigeria. So contrary to some of the views that you might have heard or read in the papers, Nigeria is open for business and India is the right partner for this business. Thank you.